Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground.
Hi, and welcome back to the Conscious Day Trader. What a day yesterday. If you haven't seen that video, I just posted how I closed my $22,000 trade. I'm not going to go into this because it's enough of that now. We need to turn page and go on to what we're doing today, which I'm going to share with you the trades that we took on Darwin X. I started trading Darwin X. I'm starting to love Darwin X because one, if you add $1,000 in there, you don't have to pay anything. Basically, you're trading on your own capital. They use Interactive Brokers as the back end, which is super solid, very good spreads on trading the NAS. Until we go to Bali, we're going to be trading indices. So that's going to be end of October. However, I say that, I'm looking on the pound dollar to see if I find any nice setups on the Fivers account, which I need to start trading. That account now I'm treating as a 5K account. So that account, the aim is to go back to 10,000, which will be back into no drawdown, and then we'll be starting getting paid on that. So we're treating it as a 5,000 account, which would mean like I'm having $125,000 funded account, even though it says 245. We're going to treat that as $125,000, which means we're going to be going down to trading 0.25. Yes, we're going back to that. Now we're going to talk a little bit about risk and how we're going to deal with that, especially on Darwin X. I'll show you what we're doing on that, and I'll show you what I'm talking about on the 5% account, which is now on 245,000. So we're 5K in drawdown after closing the 22K, only 5,000 away from coming back to having the account as normal. So I am super confident that we're going to be able to. And think about this, everyone sees this as a huge loss. In reality, is my profits that I gave away. It's not the massive loss. In terms of the loss onto the actual account, okay, we're in drawdown of 5K, and that's it. We're going to get back and we're going to make a lot more money. I am having a meeting tomorrow with Ruben, which I really appreciate that he texted me and he was like, I appreciate you put the video out, and we think you're a good trader. So let's have a chat about the risk. So I'm super excited to chat with him tomorrow and see how we can improve my risk. I can be wrong. My strategy was amazing until it wasn't. I could definitely not swing that strategy. So we're going to see how we're going to improve that strategy, and let's jump on to the trades. Guess what I've done? I've also put the Darwin X onto the TradeSync. So, TradeSync is the journal that I use. It is a bit expensive. Do I recommend it to everyone? You can just use an Excel sheet. You don't need this, but this is quite easy for me to enter and see what's going on. So we can see here the profits of the so far on that account. We've had 1, 2, 3 trading days. And we realized quickly that the 0.1, when we made the $10, we're not looking for big profits quick. We're looking to create an alpha, and creating your own alpha is very, very attractive for traders. And what that means is that your drawdown is very small, but you can slowly show incremented profits along the way. So at the moment, as we stand, if we go on to the actual overview, and the reason I'm putting it on here and we're not looking at the Darwin X is because Darwin X updates the information once a day, so after the close of the day. So we wanted to see how we're doing on that portfolio. So this is all the portfolios, so I can go on this one, which is Darwin X, and it will give me my overview of the profits. I was short twice today, and then a long position on the NDX, so the NASDAQ September futures. We're going to look into why I traded that and how I made that profit. It looks like $2, but generally, guys, this is a lot of profit on this account, because at the moment we're sitting, if we go on Darwin X, without today's trading, we're sitting at 149. I believe today we're at 179% profit with a 0.17 drawdown. So yes, am I competitive? Absolutely. Do I want to be on the top of this rank of Hall of Fame? Absolutely. Do I want to be trading a lot of capital for them? Absolutely. Do I hear the people who are doubting me? Absolutely. Do I have trust in my process and my skill set? Do I know that I've returned 26,000 return from the fivers in my account? Yes. Did I give that some profit away of 15,000 K? Yes. So all that is going to feed the fuel that I need to be getting into these ranks, and why not lead this rank? That's my aim, is to be able to beat the 6% per month with much less drawdown than 6%. So that is the aim, and we're going to create our own alpha. Then we can go into our investors. Not only that, this is a certified proven record that I can take that and go to anywhere I want, anywhere, any bank that will accept prop trading, which is banks like Goldman Sachs and other banks. They can give you capital to trade if you can prove yourself that you're good enough. So yes, we're playing the long term. Do I want to make loads of money from the fivers? Yes, I do, and we're going to talk about that in detail in next videos in the future. But today, let's go and see what happened on the NASDAQ and what trades I took and why. So here we are. This is the trade that we took. We got in at a price of 15,412. And we got out, and my face is in the way, so I'm going to move this place here. We got out at a 15,455. My stop loss was set at 15,303, and my plan was to reposition this as it was going against me. It didn't need to reposition because the most it went against me was pretty much, I believe, $2, which in overall of the account, if we take like percentages, I want to be risking maximum 3% on the account. I don't want to go above that. 3% on the $1,000 is $30. So way within our risk tolerance. If this went to $5, then we could reposition that. If it went to $10, we can reposition that. 15, 20, we'll see. I'm going to play, I always like wide stops, right? And yes, you might think, well, are you not going to change what you did? What I did was going way under in my drawdown. And we're talking about 50% in my profits. That was ridiculous, and that I did that, and we discussed why I did that and how I'm healing from that. So the new Yanis and the conscious day trader is going to be a bit more thoughtful around the drawdown. Are we going to fix it at a level? Yes. Are we going to be able to manage that level? So a 3% drawdown max. On the fivers, we can't be doing that. We're going to be doing less. But on this one, I do want to see how that evolves. And the good thing about Darwin X, it gives me live information. So if this is not working for me and I see suddenly I'm getting into those drawdowns very often, I can decrease the drawdown. But for now, I want the flexibility so I can do what I'm good at. Secondly, guys, I do want to bring up how good it felt today to just go to a cafe like I used to do in Italy. And the people that follow me, you know that feeling where I was jumping up on the camera and saying, guys, off to the cafe here, we're going to look at what we're going to see today, pound dollar, blah, 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 blah. And I was done $500 a day, and that felt good. Today felt really good not being live and trading on my account like I would do before. So I'm super, super happy to get back to that. And I can feel the energy change is coming. We're coming back. Now, we can see the NASDAQ is coming up. I had this area here, interesting, to trade it on the pound dollar. However, I have seen that from spreads of 8 to 7 here on the Darwin X, which is insane. This is the index of the NASDAQ, the futures. On the fivers is 140, so a little bit higher on the spread. So I need to be a bit more careful on how I'm going to start trading that. Am I going to stick to the pound dollar? I do want to see if indices is something that I want to get into. And I know it moves a lot quicker, which means you can get better setups, especially when you're trying to predict price. Secondly, is regulated, so the stocks are a bit more easy to look at. All the ICT stuff that we look, breakers, order blocks, they just price is a bit more efficient on delivery and manipulation. So that's something that I like. But we're going to go and see, why did I take this entries? We're going to go on the trading view. We're going to put the prices in and see how we trade this if it went against me like it did here. But unfortunately, we took this 10 pips here. It was more like nearly 15 pips, and it went all the way up. So the trade was absolutely correct. It took out liquidity above, then distributed price down. Now, even if it went down here, which was my $2 in discount, I didn't want to reposition here because I had certain areas where I wanted the price to be. If it's the worst case scenario, this is where it's going to be going. So let's jump onto TradingView. So let's look at the price action. If you're new to the channel, guys, make sure you subscribe and like the video. What you'll see here is ICT concepts with a blend of my version of how I understand the scruffy madness, which I call repositioning, and how we're going to execute this price. We caught this move during around 9 o'clock. 9:30, which was the activity of opening of the stock market, and the indexes responded really well. We can see here that the price went from a lows of 15,389 all the way to 15,461. So that was a 72 handle move, which is great. So that gives me volatility, that gives me a way to get in and out quick. As you can tell, I am a scalper, so I'm looking for those 10 to 15 handles. I'm not looking to hold this to the moon or sell it to oblivion, as they say. So what we can see here is price came down. Where did it come and stop? Exactly at equilibrium. So if we go on to the higher time frame, what has the NASDAQ? Because this is the first time we're talking about the NASDAQ. The reason you see these weird candles on the back, because this is the the NQU, which is the September contract of the futures. So obviously soon we're going to start to go into October. We're going to change the charts, but you can see we have this nice push to the upside. We had a correction of the price into the 14,650, and now we're having another push to the upside. Where did it stop? At the fair value gap there. I was considering, when I saw this, to be looking for short opportunities here. It found the fair value gap on the upper side, and then it sold off. Where did it sell off? It sell off into this fair value gap here. Where did it stop? If we add a Fibonacci retracement of that low to that high, it found close to that 50%. It hasn't retraced to the 50%. You know me, I like to trade this back into that level of golden zone, which is basically what Scruffy does. So that area there hasn't been breached, so we're still quite wary of the price can be starting to come down into retest this golden zone here. And if you look at the price from the highs here, we are in that zone where price has reacted, sort of pushing lower and lower and lower highs. In ICT form, we've broken the structure here. This is the area where the price came and retested here, and now we're selling off into the area, and we're having a big candle now reaction to this. So it was very interesting to watch live, because I am not used to the price moving so quick on the pound dollar. But this, I'm getting in tune with it, and it will take a while, but we're getting there. Now, my worst entry, as you can see, I call it the worst entry because it actually was the best entry because it delivered price, but it was around this fair value gap here. We did have the order block of this move here. I believe that is coming from a 1 hour. That candle there as the last candle on the selling motion, and then it pushed back up. So price, where did it come? It came back and retested this area, pushed all the way down into here. I was interested. I got my entry after breaking the highs. So we broke the highs, came back in, filled fair value gap there, got in and delivered 10 pips. That was really easy. And sometimes when I'm not distracted, I can find these opportunities extremely easy. Let's say now that price was coming down, which it did. I had to sit in a bit of drawdown of 10 pips. Well, how far could I take it? Because if I've got a 0.002, so I've got room, if I want to risk 3% on the account of 100 pips. Let's see if this price, let's say I got a worst entry and I got in at a lower price, where would I be able to reposition? And there was multiple opportunities where I could reposition this price, and now it didn't go to my 3% fixed drawdown. Now, you might say that this is one position. If you add another one, this will have to come up higher. And this is what we need to think. We need to start analyzing our trades, and we're going to do this with you guys when we do these video of creating alpha as a trader. which we're going to put on Darwin X so we can see our performance, and hopefully we'll get funded and hit those top 3 traders in there. I'm coming for you. Be ready. Price did come back down. How low did it drop here? Let's say we didn't have that spike move there, hypothetically now. So this came down to 26 pips. So within here, if I repositioned, I would be able to come back up and take my profits again, because we came only close to that first position. We came about that's the 0. We came about just 3 pips below. So that would be definitely a area where it would be a good repositioning for 27 pips. We would have definitely been in profit for 10 pips. So that would have been fine. So if I had repositioned anywhere around there, here, all these positions would have been able to reposition back into. So for instance, here will be 20 pips in the profit, but obviously we would be losing 23 pips or 25 pips. So we would be in drawdown of a few dollars. And that way I can get better and better price as we're coming down to get back into profit and make my money that I want, even if I get the direction wrong. Now you might be asking, isn't that what happened with your previous big drawdown? No, that's not what happened. I had a fixed stop of $2,500. I didn't stick to it. So that's what's changing now. I'm not changing anything about my strategy, anything about repositioning. The only thing that I'm changing, and it's going to be a hard stop, and I'm going to hold myself accountable, and you can hold me accountable to that if price hits 3%, I am closing that trade. It doesn't matter what happens. If we hit that $30 mark, I am closing it. Full stop. That's the change of the conscious day trader on this. Now on the fivers, and just to talk about this trade, we saw here that fair value gap pushed up, and then this is the area where you need to be strict about not getting in again. We're already with this trade, if I go to my strategy analytics or to give me my performance, we're already returning nearly 2% on the month. So as a trader, think about the investor now. He's got 2% return on his investment. We need to decrease our performance and our risk on this account already, because we had an amazing trade. Why keep pushing that boundary to hit higher and higher percentages? So when I trade this tomorrow, I'm even going to go to even less of, from 0.2, I'm going to go to 0.1. Why? Because I'm hit my target for the month. Imagine being an amazing trader that you can return that amount. Now you can put your feet up and you can start decreasing risk. You don't need to hit that 0.5% every day. You had a great performance, now protect it. And that's going to be the new mindset that's coming in. Now on the fivers, look at this reaction now. That would have given, what has this done now? That's why I like the NASDAQ, because it moves. That's 10 pips there. So you could have had that 10 pip off that fair value gap with not much of drawdown. So yeah, that would have been 10, 11 pips on that fair value gap selling off. So that was really good, because you can sell it off into the previous daily high. And it does it quick, and it hasn't given us a lot of repositions. Now, you might say, if you were shorting this, where would you reposition? Obviously, positions would be repositioning here for 30 pips. If I did 30 pips, that would be like $6. So you can easily reposition this, because we have the room to short at equilibrium. If that continued all the way up here, yes, you could reposition this for this and then slowly make profits on the downside. If you're completely wrong, because the NASDAQ can move, and it can move really, really fast, then we're going to use that hold of the hard fix to see if it gives us the opportunity to get out. Now you might be thinking, this is a negative risk reward, and I was in the coffee where Anna's in the fivers where they were talking about risk reward. I don't sign up to the risk reward, because what I want to do, I know my performance, and yes, I need to be strict on that hard stop, which I wasn't, and we explained it why. If you haven't, go and watch that video, because it will make total sense of what happened in my life and how that changed the way I'm trading. But in terms of risk reward, I don't sign up to, I'm going to make one, lose one, because I know that's not going to work for me. What's worked for me and has been extremely profitable, consistent days for 6 months, 26,000 extraction payouts from the fivers, and I'm still not in negative ground. So yes, I didn't make my profits, but I'm still not in negative ground. I haven't lost any of my money. So we're still in 5K drawdown, which is going to be up very soon. And I promise you that you're going to see it. So what we're going to look at is risk. Why I don't sign up to risk reward is because my edge on the market is not 50-50. My edge on the market is in the 80s and 90%. When I get it right, I do get it right, and I get it really well. The other thing that is increasing my win rate is I'm not looking for a lot of pips. I'm just looking for 10-15 pips. I can do that repeatedly in the market every single day. Now, if it goes against me and I'm wrong, I'm not very wrong. And that's the key. The one-to-one risk reward, you're either right or wrong. My way of method, and I've learned it from my mentor, Scruffy Trader, and which is also from the Rough Guide, like pound averaging from the bank system. What I'm doing is let's say I'm wrong, and I'm not very wrong. As price is going against me, I'm trying to get a better position to correct my entry. So my first entry needs to be corrected. I need to get a better position. I need to manage it within my fixed stop, which is going to be that 3% on this account. We're going to try it and see if we get hit by $30. Then we're going to start decreasing that to see maybe 3% is too much. Funny enough, that's the daily drawdown that Ruben is talking about on the Fivers. So we're going to see the fact that he's put a 3% also gives us a little bit of justification. He's the head of risk management on Fivers, on why it might be a good idea to limit yourself to that. So there we go. That was the trade. We're sitting on 179, I believe 179% return. This is going to update tonight. And as you can see, experience required to create a Darwin. A Darwin is when this broker will create an index of my trade, and I will be listed on this market here, all Darwin A. So I'm coming for this guy. I like what he's trading. I like the amount he's trading, and I think I can trade better than drawdown of 13 when I put my head to it. And the delivery, he's done this for like 15 years or something, so that's why the return is enormous. But we're going to hunt for these guys, so I'm coming for you in a good way, in a healthy competition, because we're all here to make this a living, to make money from trading, and I think that this is a great way to do so. What I also think is a great way to do so is our favorite prop firm out there, which is the Fivers. And if I switch onto the Fivers, I just took a mini trade there, which was right, but psychologically I'm not there yet to start trading this account. I need to move forward from this. This is going to be, I need to get back on that horse and not letting this loss affect my personal trading, because we have 5K on this account. It's a big account. You might think it's not as big as 250, but that's the drawdown. That's all I care about. I've got 5K and I'm trying to make to push it back into 10K, so then I can start making money of this. And I'm super confident that I'm going to do this, but we're going to do it the right way, and we're going to fix some things so we don't have to get into that risk. I will let you know how it goes with Ruben tomorrow. I've got a one-to-one with him about the risk and what I thought about it, and it's super great. I'm super grateful that he's taking the time to have a chat with me about this, and we're only going to get better about this. So I hope this video has been good. I hope you've had a good trading day. Yes, we are trading the NAS, and who knows, we might start trading the pound dollar again. Look at that push up again into the 4.9s. So that would have been a good trade entry that I got in there. I just closed it very quickly because I was getting a bit nervous with the position size. I wasn't sure if my position was right, even though I was trading on a 0.25. So we're going to work through it. You're going to see it live. I'm going to do the work that's required to get me back to that mindset of winning and being the best of the best, trying to be in that 1% of the world. I'm going to back myself, and I know a lot of you are backing me on that as well, which is great. And I love all the messages that have come coming in and the success stories that's coming in. I'm super thankful for the community that we have, the Vanguards, the free version of the Discord. You are making me think that the free version might be worthwhile keeping it in there, because I'm seeing some more engagement that is meaningful to me and to the rest of the community. So that is pushing me on the direction that I think this is today. Yesterday I was so different. Today I'm thinking about maybe it's a good idea to keep it in because I see value in it. And if I see value in it, that means that there's value there for others. All right, guys, this has been not very long video, but it's been a great video because we're back on track and we're starting to track that Darwin X, and we're going to start building that momentum to the upside. Hope you have a good day, and I'll see you tomorrow.
I can't take no loss. I don't even know what it costs.
Darwin X, bring the drums in.
I can't take no loss.